Very thankful on this Wednesday morning to be able to look at our money mindset information with our friends at Lock Shield Partners. This is where we look at money as a tool, not just as a goal. So thankful to have you as a part of our morning.
And hanging out with Clark Hayden from Lock Shield Partners. It is tax season, Clark. And here's a big question for you, all right? Is it better to go the itemized routes or just, take maybe the easy way out and do a standard deduction?
Good question. Good question, Derek. And these are some of the most common tax questions that we get. And I'm actually going to start with one of the really common statements that we hear that oftentimes isn't true, which is, it's actually better for me to keep my mortgage because that interest saves me on my taxes.
You
guys ever heard that before?
About this, because I've heard that, Clark.
You've heard that before. It's a pretty common statement, and that may or may not be true. To dive a little bit deeper into that, the IRS allows every taxpayer to claim what's called the standard deduction. So for a married couple this year, for the 2023 tax year, that's $27,700. For a single filer, it's half of that.
Okay.
You don't have to do anything for that. You don't have to provide any documentation. It's just given to you. Itemized deductions, on the other hand, are a combination of a lot of different things. Your charitable contributions, your mortgage interest, your property taxes, your state and local taxes paid, and even some other things are thrown into that bucket too. In order for you to claim itemized deductions, they have to add up to more than the standard deduction, which this year, like I said, is $27,700 for a married couple. That's a lot of money.
Yeah.
So unless you're making really significant charitable contributions or you're paying a really extreme amount on interest or taxes or something like that, you're probably claiming the standard deduction. The vast majority of Americans claim that now. And so that's where that statement can maybe be true if you're claiming itemized deductions, but most people aren't.
So there's really no easy way to figure that out other than just sitting down and adding up all of your deductions and seeing if it's greater than that minimum amount.
That's right, Derek. And if you have a tax professional prepare your taxes, even if you don't think that you're going to have enough itemized deductions to be greater than the standard deduction, it does still make sense to turn those in and allow them to plug those in and report them on your return, because it may not make an impact on your federal return, but states do have vastly different numbers for their state standard and itemized deductions, especially in Kentucky, and it probably will make an impact on your state return.
It's good to have this information, especially this time of year. If you want some more details, you want to dig deeper into this, you can head to ChristianFamilyRadio.com or you can go to LockShieldPartners.com.